Hello, guys. Welcome to your market report for this Friday, August 3rd, 2018. Really glad to have you guys here, and let's get the show started. There's not a whole lot of big movers and shakers today. I guess probably the first thing I'll start with is I'll start with silver today. And let's start the charts right here. Now, the first thing we're going to look at is the fact that silver they've been trying to knock it down lately really vigorously. But I notice that there's kind of a wall in there around below $15. And I'm thinking that there would really be a massive wall if they took it down below 14. And so what we're looking at is a tremendous amount of resistance. In fact, they could actually stimulate a silver shortage if they tried to take it down too low, because there's a certain cost that the miners need in order to get it out of the ground. And so now what they're looking at, you're looking at a commodity that's basically found bottom many times. It's found bottom already, and it's ready to spring upwards. There's not much room for it to actually go down, so there's very little downside risk involved for investors in silver if they're buying physical. Now, get what I'm saying. Only buy physical at this point. Physical silver, and keep it in your possession. There is probably one of the things with the least amount of downside risk. Now, let's talk downside risk just for a minute. First off, some things like Bitcoin, has a lot of downside risk potential. Bitcoin, I'm going to tell you honestly, and be honest with you, it can go down to $2,000 before it goes up again. And so if you bought in like at, I don't know, 7,500 where it is today, and it goes down to 2,000, you've lost a lot of money if you sell and incur those losses in at 2,000. You don't want to do stuff like that. If you decide you're gonna buy into Bitcoin, you buy in at these prices of $7,500. If it goes down, you hang on for dear life, and you don't incur the losses by selling. If it does go down to say $2,000, you buy more. You don't sell what you have, because eventually Bitcoin's going to go astronomically high to the moon. But Bitcoin could be in for a rather severe dip between here and the moon. Whereas silver's pretty much went through a bottoming process for a very long period of time, and any significant dips in price in silver would destroy the incoming amount of silver that's coming in from the mines and stuff. It would cut off the supply. And so silver doesn't have much room. There's not much wiggle room here in price for silver anymore. So there's not much downside risk. Upside potential on cryptocurrencies is greater than the upside potential, I believe, on silver. But I believe that the upside potential on silver, eventually when it does come, is going to be rather huge. It's just that cryptocurrencies is going to be beyond this world upside potential. Whereas silver is you're probably going to see triple-digit silver at some point in the not-too-distant future. So it has a lot of upside potential as well, silver does. Okay, enough talking about silver. Let's get on to cryptocurrency right now. Bitcoin Wisdom at $7,427. Yesterday I was saying that on both of them, I believe I said it on both of my channels. I know I said at least one of my two channels is that Bitcoin price was going to possibly go down into the 6,000s again. And it's in part of this bottoming process. If you look on this chart right here in the 12-hour, you can see it. Here we are. We'll back up here on this. Oh, come on a little. Well, okay, this one right here. There's where it was up on the high of the highs, and it's come down. It's made a couple lower lows and lower highs. And now what we're happening is we're on the third bounce, and the third bounce is ending, and you see we're coming off of it. And what are we going to do here? The first bounce, we went down here, right here, on this level right here. Now follow that line across. You can see the second bottom was just about the same, and the third bottom's just about the same. What's that telling us? That's telling us that the fourth bottom's going to be probably just about the same. If you got three, here's one right here, and there's the bottom. Here's two, there's the bottom, and here's three, there's the bottom. You're looking at roughly more or less the bottom in around 6,100, maybe 6,200. So that's probably where we're headed. We're probably headed down to 61, 6,200. We're probably going to do it again. We just keep doing this. We keep touching this bottom, making bottom in this bottoming process until finally the market turns around. In the end, the market will turn around, you know. And if you're lucky enough to have bought in these bottoms, then when the market turns around, you're going to be sitting pretty. So now let's move on. And let's look at cryptocurrency market capitalizations. $262 billion is the cryptocurrency market cap today. And we were up around $300 billion. So you can see this easing back. Money coming out of the cryptocurrency. It's probably another $30 billion in the last month has come out of the cryptocurrency. And it's eased back to 262 from 300 billion. I could see it easing back before this thing is over to possibly 180 billion or something like that, before this whole thing is over and before we go back into a bull market. But then on the other side of that coin, when the next bull market ends, I could see us being at $4 or $5 trillion market capital, seriously. And Bitcoin dominance right now is at 48.4%. Now, this morning on my other channel, I did an episode on a coin. Down here, Binance coin is what I talked about on my other channel. Binance coin is a very interesting coin. It's doing very well. It's at 16th position right now. It's a very interesting coin, and it's a coin I'm going to be looking at, maybe getting a half a dozen of them. That's because I find that to be a very interesting, very nice looking coin to me. Now, we're going to take a look at the Dow Jones right now. Dow Jones is up 42 points on the day. I was expecting it to go down to 25,000 and then make a bounce, but maybe it's starting to make a little bit of a bounce, and I was expecting the bounce to go up to 26,000. Well, she's at 25,387 right now. Bonds and rates. Let's see what the bonds are doing today. The bonds are down a little bit all the way across the board, except the only one that's not falling, the yield that's not falling, is the 3-month, the short-term yield. It's not falling right now. It's unchanged, but all the others, the yields are falling. I'm very suspicious that it might be the Exchange Stabilization Fund or some entity out there that's causing these bonds to be like this, to not move, while the Federal Reserve is drawing liquidity out of the system. This doesn't mean that just because the bond yields are not rising, does not mean that they're not drawing liquidity out of the system. They're drawing massive amounts of liquidity out of the system. Of course, one of the things that's pumping liquidity into the system on the same side is the cryptocurrency. So in this last month, they went from about $299 billion down to, what was it this morning, $260 billion. That's $40 billion worth of liquidity that the cryptocurrencies have pumped into the market in about the last month. And so what's happened is the Fed's drawing that liquidity out on the other side. It's like one guy dumping water into a swimming pool. On one side, he dumped 5 gallons of water in. Another guy's got a bucket, and he pulled 5 gallons out from the other side of the swimming pool. The level rate stays roughly the same. But cryptocurrency has actually dumped an awful lot of money into the market because it exploded all the way up to $750 billion, and now it's dropped back to 260, I guess it is. That's an awful lot of money. That's about $500 billion. And when you understand what actually happens on a cryptocurrency transaction, you'll understand why that cryptocurrency is actually inflationary. It's working like the trade. See, there's a number of reasons why we haven't had this deflationary thing happen, and some of the reasons why we haven't had it happen have to do with things that are inflationary, like Trump's Trade tariffs, extremely inflationary. The cryptocurrencies are inflationary. The tax rebates and stuff have been inflationary. We've had all these inflationary pressures coming in to help counterbalance what the Fed's been doing. And it's been successful so far at counterbalancing what the Fed's been doing. So seemingly they've been getting away with withdrawing all of this liquidity out of the system for the last few months. But they're going to keep at it, and we're going to have to wait and see what happens when they keep at it. U.S. dollar index today, 95.18. That's what the U.S. dollar's doing right now. So she's riding high right now. She's cracked the 94s. She was in the 94s for the longest time now. Now she's in the 95s. So she's up. Now we're going to take a look at oil. Oil price is down 29 cents today. That's a 0.5% at 68.67. But overall, since yesterday, it's up a little bit because it was down to in the 67s there, 67.82, I guess. So it's back up into the 68s, mid 68s. But it's fallen today a little bit on the day. So listen, this has been your market report, guys. Thank you for tuning in, and we will see you on Monday. I'm going to try to do a show this weekend, some sort of a show on the finances. I got to do a lot of research in order to find out what we're going to talk about. I got to do some digging. I got to get on there and probably do about 4 hours worth of research. So listen, thank you guys for listening. Like and subscribe, and we will catch you on the next show. Bye-bye for now, guys.